Today, we're going to break down how to build real wealth. And I'm not talking about risky bets or trying to time the market, but with a proven, steady strategy that absolutely anyone can use. So let me ask you this. What if putting aside just 200 euros a month, about what you might spend on coffee and takeaways, could actually grow into €250,000? It sounds kind of like a fantasy, right? But it's not. It's the power of a financial engine that works quietly in the background. And in this explainer, I'm going to show you exactly how it all works. You see, the real secret to building wealth, it isn't about luck, and it's definitely not about being some stock-picking genius. It's about understanding and using the power of compounding. This is the force that can turn small, consistent savings into a genuine fortune. All right, so this incredible promise of turning a little into a lot, how does it actually work in the real world? Well, it's so much simpler than you probably think. Let's break it down. A lot of people are convinced that making money in the market means timing it perfectly or finding that one hot stock before it explodes. But honestly, that's just a high-stress, high-risk game of pure guesswork. The real strategy is much calmer, and believe me, it is way more powerful. Okay, so to unlock that €250,000 promise, you only need two things, and I like to call them your secret wealth weapons. First up is compounding. And what's really interesting about this is just how simple the idea is. It's where your returns start earning their own returns. The best way to think about it is like a snowball rolling downhill. It starts off small, but it just gets bigger and faster over time. It's literally your money making more money all by itself. And your second weapon is the ETF, or Exchange Traded Fund. The easiest way to think about an ETF is like a single basket that holds hundreds or even thousands of different stocks. So when you buy just one share of an ETF, you instantly own a tiny piece of all those companies. It's diversification made simple, and it's incredibly low maintenance. So here's the crucial difference. With stock picking, you're dealing with high risk and a ton of stress, always trying to guess what's next. With ETF investing, you get a diversified, low maintenance, and steady strategy. This approach helps you avoid all those emotional traps and high fees that sink most active traders. For long-term wealth, the choice is pretty clear, right? The goal isn't to try and outsmart the market from one day to the next. The goal is just consistency. The millionaires who built their wealth this way didn't do it with frantic trading. They did it by patiently staying in the market, letting time and compounding do all the heavy lifting for them. Okay, so you get the concept, but how do you actually do it? Let's break it all down into a simple 3-step automatic plan that you can literally start today. Step 1. Just pick a broad, low-cost ETF. You really don't need to get fancy here at all. For example, you could look at ETFs with ticker symbols like SPY, which tracks the 500 biggest US companies, or VTI, which tracks the entire US stock market. Historically, over the long run, both of these have delivered average annual returns of around 10%. Now, these are real historical numbers, not guarantees, of course, but they show the potential. Okay, now watch what happens when we apply that 10% average to our €200 a month. After 10 years, it's already grown to over €35,000. After 20 years, that same investment has become over €104,000. But look at this, the real magic happens in that third decade. Your contributions just explode to over €245,000. That is the power of compounding in action. Just look at that number. Let it sink in for a moment. This isn't from some lucky stock pick. This is from simple, consistent, almost boring investing. And that's really the core idea here. €200 a month, invested consistently, can quietly turn into a life-changing €245,000. So if €200 a month can do this, what could 300 do? Or 500? Seriously, what's your number? I'm genuinely curious. Let me know down in the comments below. Okay, step 2 is absolutely crucial for your success. Automate it. Set up a recurring monthly purchase with your broker. This is the true set it and forget it method. It takes emotion completely out of the equation and forces that habit of consistency. Now, all of this sounds pretty straightforward, but there is one major challenge that trips almost everyone up. So let's talk about how to win the long game, because this is where most people fail. The market will have down years. That is a guarantee. Just take a look at this. In 2022, the market dropped over 18%. And that felt terrible. I remember it. But anyone who panicked and sold would have locked in their losses and completely missed the massive 26% rebound in 2023. The data shows that down years are very often followed by strong recovery years. This is so important. Compounding only works its magic if you stay in the game. When you panic sell during a dip, you're turning a temporary on-paper loss into a permanent, real one. You absolutely have to ride out the storms to enjoy the sunshine that always follows.
Okay, we've covered the why and the how. The only question left is when. And the answer to that is simple: now. Your journey starts today. So let's just recap the entire plan. It really is this simple. Step 1, start small and pick a broad ETF. Step 2, automate your contributions so it just happens without you even thinking about it. And step 3, stay in for the long term. And that means through all the ups and all the downs. And just remember this: time is your single greatest asset. Every single day you wait is a day of compounding you can never, ever get back. The earlier you start, the richer your future self will thank you. Hey, if this explainer opened your eyes to what's really possible, do me a huge favor and hit that like button. And if you want to be part of a community that's all about making wealth building automatic, subscribe and join the Howtomatic crew. Thanks so much for watching.